What's up, guys? Alright, so this video is going to be a little different. This is not going to be about a strategy. This is not going to be about anything too crazy. This is mostly for beginners, and if you're advanced, you can also watch this. So, this is something that I feel all traders should know, right? And I believe that once you know this, right, there's no way of going back. Like, once you learn this, it's just there in your mind forever. All right. So this is basically about how the market moves, and once you know this, it's gonna elevate your trading. All right. All right. So what is this thing that I'm saying? All right. So before we go into the video, this is not a financial advice. I'm not a financial advisor. These are just things that I personally see in the market and realize. Right. So I'm just sharing my knowledge with you guys. All right. So without further ado, let's go through it. All right. So what is this? Right. I'm pretty sure you guys would have heard about this. ERL to IRL, IRL to ERL, and liquidity points. These two things are totally different. Alright, so let's look at ERL to IRL first, and IRL to ERL. What is that about? So basically, this is how the market moves day in and day out. I know you have been taught, or you would have heard about this in trading, right? This is how the market moves, etc, etc, right? So there's three types of move. There's only one where it's an uptrend, right? One is a downtrend, and one is range. Correct? So these are the three ways that you have been taught that market moves. Yes, I'm not saying it's wrong. It is correct, right? But the reason why this moves is because of a simple logic called ERL to IRL, right? So when it's, let's say you're in an uptrend, right? Which means to say you're making higher highs and higher lows, right? Why does that happen? Basically, right? It tapped into a IRL and then goes to a ERL. Taps a IRL and then goes to a ERL, right? When the market is deciding, okay, now where should I go? That's where you get the range, right? And then when it decides its range, that's when you get ERL to a IRL to a ERL to a IRL. I know it's getting a bit confusing, but it's actually very, very simple, right? It's a simple way to understand this. All right, so I'm just gonna type it out for you. Please take notes of this. All right, because these are things that no one actually taught me when I got into trading, and it's just things that I had to learn myself. I have to see the markets myself, and trading actually is easy. The more simpler you make it, the easier it becomes. Trading doesn't have to be hard. And yeah, I'll talk more about that later, but let's go into this simple concept first. All right, so basically, what are ERL, right? ERLs are basically swing points, right? So swing highs, swing lows. What else? Actually, yeah, let's just make it super simple, right? Swing highs and swing lows. All right. Cool. I'm just making it super simple for you guys. Later, I'll be showing you some examples. All right. And sorry, guys, I'm a little sick, so don't mind, right? Because I wouldn't have time to do this video after this, so I'm just gonna push through and teach you guys all I know. All right. So what is IRL? Right? IRL is simple. IRL is basically fair value gaps. Just keep it simple. All right. So remember these ERLs are swing highs and lows. IRL is fair value gap, or you can call it what do you call it? Imbalances, right? This video is going to be a little long, but if you guys want to learn something to elevate your trading, I suggest stay tuned. All right, just listen to everything I say. All right, I know it's going to be long, but it's going to benefit you guys. All right, swing high, swing lows is ERL. IRL is fair value gaps and imbalances. Before we go to what time frame do we have to see this, right? Let me tell you what is ERLs. For example, right? Swing highs and swing lows. What are swing highs and swing lows? Right? Swing high is basically when one candle, or for example, the first candle and the third candle is lower than the middle candle, right? So that becomes a swing high. Same thing for a swing low, right? When the first candle, oops, let me zoom in for you guys. When the first candle and the third candle is shorter than the middle candle, right? That is a swing low. All right, I'll make it thicker. Yeah, that's a swing low, and this is a swing high, right? All right, cool. And fair value gaps, I'm sure you guys know what is a fair value gap, but if you don't, basically it's a 3 candle pattern, right? 1, 2, and 3, where the first candle and the third candle wicks do not touch or do not like close, and there's a gap in between. All right, same thing for the upside, right? This is called a bearish fair value gap, and this is a bullish fair value gap, where there's a 1, 2, 3 candle pattern where the wicks don't touch and there's a gap in between. That's a fair value gap. All right, so this is ERL. All right, simple as that. So now this is how the market moves, right? It has to tap a ERL or a IRL and then move. All right, but with that being said, doesn't mean every point that it touches it will move, right? There's a bit more criteria to it, right? And where do we see this, right? It really depends. If you are trading, let's say on the 1 minute or the 5 minute, I believe you can just use the 4 hours and the 1 hour. But if let's say you want to be extra sure, right, you can use the weekly, daily, 4 hour, 1 hour, even the 15 minute, right? Even the 15 minute. But if let's say you really want to refine, you can go all the way down to 1 minute. All right, but for me, I will use anywhere that looks clear to me, right, until 15 minutes. I won't go anywhere lower than 15 minutes. All right, so usually what I do is I use 4 hour, 1 hour, and the 15 minute, because I trade on the 1 minute, so I make it easier, because yeah, it just gives you an easier daily bias and all that. All right, cool. So that being said, now I'm going to show you an example, right, of, maybe let me go to NQ, right? We had a trade today, so that was a cool trade. And yeah, let me just go through it, right? Let's delete all of this. Cool. All right, so going into London session at 2 a.m, right? 2 a.m New York time, what I did was I looked for the same thing, ERL and IRL, right? So I started off on the 4 hour. What do you see on the 4 hour? It's super messy, right? You can't see any pattern or any, like, when I say pattern, I mean high highs and high lows, right? You don't see it as clear, right? Because you have like a higher high here, higher low, higher high, higher low. What else do you see? Higher high, higher low, right? So the last higher high and higher low, the extreme high highs and higher lows that you see is right here, right? So this is still showing me, okay, it's a bearish trend, right? But it doesn't really give me the confidence, because it's still like in a range, right? And other things that I can see is, what else can I see, right? There was a IRL here, right? There's a 4 hour IRL here, price tapped, right? Price tapped, and right now it's above, right? It closed above this 4 hour fair value gap. So my only narrative right now is it tapped a IRL, so it could be aiming a ERL, right? So right now my trend is bullish, right? It's, although the overall is bearish, right? If you just look at this, it just shows me that it's going down and down and down, right? It's respecting 4 hour fair value gaps, right? And then it pushes down, right? When it goes up and then it goes down. So at this point, right, I was bullish, but I'm still not confident, because it's still a range. Overall, it's still a range. I don't see it clearly, other than this, which closed above after tapping this, and I'm like, okay, it could be bullish. All right. Now we drop to the 1 hour. Now at 1 hour, what do I see? Right, I see that ERLs have been swept. Right, all the swing lows on the 1 hour have been swept. Cool. So this again makes me think, all right, I'm bullish, right? Because ERL is swept. Where are we going? We're going to the IRL. But at the same time, right? What do you see on the 1 hour? It's super clear, right? It's just showing me, all right, it's a downtrend. We're making high highs, high lows, high highs, high lows, higher high. We made a sweep of everything, and then we made a higher low, right? So when we make this higher low, we tapped into, yeah, this 4 hour fair value gap, and now we are going up, right? But we are in an overall downtrend. So what are we going for, right? We swept ERL. Next, we are going to the IRL and then going back to ERL. So let's delete this 4 hour fair value gap, right? So my bias became 0 again, and now my bias is down. It's going downwards. So where would I possibly think that the price would go, right? So I automatically assumed, all right, the price is going from here, right, from this fair value gap, this 1 hour fair value gap. It could possibly, remember the keyword possibly, right, tap into this 1 hour fair value gap and then go all the way down to this ERL. Okay, that is scenario number 1. Scenario number 2 is, once it taps, it could also, right, just respect this and start a change of character. That means it wants to go higher, right? It can do that also, right? So these points that we are marking out right now are just possible points of reversal, but our overall bias is bearish. So that's how you get your bias, right? So next is my own strategy. Again, this is not a strategy video. It's how I do my strategy, right? I find for unmitigated fair value gaps and all that. So when I looked at the market when 2 o'clock opened, right, I saw, all right, there's a fair value gap here, right? There's a fair value gap here. Maybe let me change this 1 hour to a different color first. All right, so I see this, right? But I don't see any fair value gap after 2 o'clock being respected yet, right? If this was respected, I would have took the trade to the top side, because remember, I wanted to touch to a ERL. So at least to the ERL, I would have took a trade. Even this fair value gap was not tapped, right? And then it decides to go up, right? It taps, oops, sorry. It decides to go up. At the same time, what is it doing on the 15-minute? It just swept a ERL. So once it sweeps a ERL, my higher time frame bias is showing me bearish. So that's like an early sign that, okay, it's going to go down, right? So we drop as to my strategy, right? We drop to the 1 minute. We wait for a tap into that 15. We also tapped into the 1 hour, which showed me, okay, price may reverse, right? So all this ideology behind ERL, IRL, and all that is just a idea. It's just a way to make yourself know that, okay, these are the possible things that could happen. I'm very sure you guys would have heard this. Do not stick to your bias, right? And this is the reason why. Because sometimes you think that, okay, my bias is right, it's going to be sells, but the market will do what it wants to do. It will just go up or down, right? Same thing for strategy. Your strategy could be like an A plus strategy, and I mean A plus setup, and you could have still lost, right? That's the same reason, because you can only predict what the market is going to do. So what I'm teaching you is how the market moves, right, about 80% of the time, right? And you can use that to your advantage, right? Because my strategy, I don't even use daily bias, but if you have a daily bias, it's better, right? Like what I said, if I had a 15-minute that was respecting going up, I would have still took it, right? So let's see this, right? So according to my strategy, I did everything, right? -1 would have been my stop loss level. -2 is my TP level, right? So what do you see in between? That is the 1 hour IRL that I drew out. But I'm not afraid of that, because how the market moves, ERL to IRL, IRL to ERL. It doesn't move IRL to IRL. It does when it wants to reverse, right? So I'll be careful around the area. Plus my break even point is already above, so I wouldn't actually care, right? So it went down, went down, went down. At this point, I was actually break even, right? So I didn't really care about this. And as you can see, right, we hit full TP, right? And that is because of the help of this ERL and IRL, right? I believe we had another setup on what is it? EU, right? Okay, let's take a look at EU. All right, was it EU or GU? Okay, I'm not too sure, but let's take a look together, right? All right, so at 2, right? Cool, at 2. So same thing, we go to the 4-hour. Let's look at it together. All right. Let's look from here. So clearly we are in a downtrend. All right. Next, we went down. We swept some sort of ERL, I guess. Right? Yeah, we swept some sort of ERL. We tapped into this. We didn't respect. All right. So we tapped into some sort of ERL. Right. Price went up. Tap into this 4-hour gap right here, and then it go down again. It tapped our, what is this, ERL. Cool, we tapped the ERL, and what happened next? I'm assuming price would go up, right? Cool, my bias is bullish. Go down to 1 hour. What do you see on the 1 hour, right? Same thing after it swept, price disrespected 1 hour fair value gaps right here, right? Disrespected it, went up, tapped into this IRL, went down, didn't sweep, right? It didn't really sweep the, what do you call this? It didn't really sweep the ERL here. But if you look at GU, it's the same thing. Cool. Okay. But yeah, we didn't really sweep because on the 4 hour we already swept, right? So we are going up. So it's just finding reasons to, push itself higher, right? So was there a reason? Yes, we have. We have volume imbalances here, right? This volume imbalance is what's using it to push itself to go up, right? Cool. So you can delete this and this. We are looking for a IRL. So for me, basically, if you're in a downtrend, this are possible signs of IRL for me. The point I'm trying to make, right, is we never know where the market is going to go till. So that's where your strategy comes into play. The main thing I'm teaching you guys is how a market moves, right? This is the simplest way a market moves, right? You could tap this, or this, right? So yeah, let's go to the 15-minute. Oops, why is it so far? Okay, go to the 15-minute. So now I'm assuming, right, market needs to go. Oh, okay. Sorry guys, my bad. My bad. All right. My bias is bearish, all right? The reason being is it swept the ERL, it went up and it tapped. What did it do? It tapped a 1 hour fair value gap. So my bias is bearish, right? It's going to the ERL. The replay tool made the move go longer in time. So that is how you see I saw that it was bullish. So I believe right now, from whatever time there was 4 o'clock, right? Let's look at it later, but from 4 o'clock, I believe it was bullish because I believe the candle moved till 4. But one thing at a time. So right now, I'm bearish, right? So yeah, cool. I mean, everything is already set up for us, right? It's already set up for us, and look at it, we changed to bullish. But when my strategy was there, right, or rather when I was in the belief that we were bearish, right? Did we have a bearish move? Let's see whether any setup got reacted, right? Yeah, we got a reaction here, right? Where we would have actually took a trade for at least a 1:2. Did we hit? Oh, we hit a 1:9. Cool, right? Okay, so that's how the market moves, right? So again, 1 hour we use this. So this happens from time to time, right? It uses the IRL, like what I said at the start. Use the IRL to reverse back. So if this, as I said, was bullish, I would be aiming for this highs here, or this highs here, or whatever high, to see if it reacts and goes down with my strategy, right? So let's take a look at it. What happens? Starts being bullish. Look at that, it swept. Do we have a reversal from there? No, we didn't. So I'm believing that we are gonna go up here. right? When I say reversal, it has to happen during the session timing for my trading session, right? So let's take a look at it again. So IRL, ERL, IRL, ERL, right? And then it decides to sweep over. So went up, IRL goes down. Let me take a look at something. I believe we had a ERL on 15-minute over here. Let me just take, yeah, cool. So this was the ERL, right? So I have a ERL, and then now we should be going up to the IRL. Then if it's truly bullish, right? So it should go up, right? Goes up. So over here, what I would anticipate is a change in market flow, right? So it could go down, tap on a ERL, and then go up, right? Yeah, something like that. So the market just moves like that. Let me show you one more example. Oh, we're already in 20-minute in, man. So sorry, guys. Or should I just cut this into part 2? Because if not, the uploading time will be damn long. Alright, you know what? I'm gonna cut it into part 2. So watch part 2 right after this.